Hello, everyone. We're live from our Moomoo Singapore office for another live webinar show. I'm your host, Olivia Higgins. Now, as we wait for a few more people to join us, here's a video made just for you. Enjoy. Welcome back, everyone, especially to those who just joined us. You're with me, your host, Olivia Higgins. Now, it's a pleasant Wednesday afternoon, and we're so excited, as always, to dive deep into another subject and potential opportunities within the investment space. Now, at this point, I like to remind you that we're here to equip you with the educational tools and guidance to help you make better investment decisions. So it's important that you take this as a learning journey. Take your notes down and ask your questions, because it's all about discussion today as we talk about a very important topic that is pretty hot right now in our trending spaces on our community forums Moomoo app. So it's time to also network. So if you are in the chat with other community members, remember that it's always a two-way conversation. So type in anything you want regarding the topic, and we'll pick the best questions at the end to ask our experts, okay? So be ready to learn and be a part of the discussion. It's time to network and also chat with us. So please stay to the end for the questions and also the live demo that we're about to show you at the end for you to apply the insights that you learn regarding the topic, okay? So let's hop right in. Now, as China faces a period of transition, we're looking at its global reopening right now. So today, it's really about learning possible ways we can actually learn about the drivers, but also potential opportunities within the space of investment. So today's topic, it's all about China's bright spots, where to invest now in its global reopening. Now, as we mentioned in the previous shows, we want you to continue to take charge of your 2023 as we go and proceed into mid-year. So it's really important that you look for more ways that you can diversify and leverage on the potential opportunities out there. So today with me from Global Investors, LG, let's welcome ETF product specialist Xiang, and from Moomoo Singapore, Senior Manager of Corporate Institutional Sales, Yong Shern. Hi, gentlemen.
Hello, good afternoon, everyone. Thank you for joining us today, and thank you to Olivia and Yong for inviting me here tonight.
I
I'm
know.
Xiang from Lion Global Investors. Thank you.
Yeah, really great to have you. And this topic, it's trending as well right now in our community forums. So really, before we go into our discussions, what's the objective of today? And also, what can we expect from the show?
So like many of you here, I used to wonder how ETFs work. I first came across ETFs more than 10 years ago when I wanted to use ETFs for my own portfolio. So ETFs, think of it like Lego building blocks, which you can mix and match to build your own portfolio. They're also a useful tool for investors like you and me to gain exposure to proper diversification that can be used and are exclusive to institutions. So I'm here today basically to share about how you and I can use ETFs as building blocks to optimize China exposure in our portfolios. And before talking about this specific building blocks, let me first also introduce a bit about LGI. So LGI, we are the asset management arm of OCBC Group, the longest established Singapore financial services group, and South Asia's second largest financial services group by assets. And besides
Oh,
LGI, OCBC Group also consists of OCBC Securities, which is our brokerage arm, Great Eastern, which is our insurance arm, and Bank of Singapore, which is our private banking arm. And we are one of Southeast Asia's largest asset managers.
thank you for
Yeah.
that quick introduction. We'll get to know a bit more later,
Yeah.
but Shern, before we come back to you later on in the show, what is the objective of today's discussion?
Hi, Olivia, and hi, everyone. Thank you for the time. Thank you for joining us today. So, for today, because being in this show, I believe I also have a presence in a couple of shows. So, myself and an ETF lover for many reasons. But so today, I would like to teach you, or today, I would like to demonstrate how you can turn whatever strategies that Xiang is going to share, or that you have, or you have heard of any ETF strategy that you heard outside. How could you turn it into action through Moomoo app? And please stay tuned for my tutorial.
Great. Now we will go into a short fireside chat with Xiang and Yong. We'll be back with you very shortly at the end. Now, Xiang, what do you plan to achieve for today's topic? I know you covered a little bit more, but let's go in depth on also the, for the audience that doesn't know you, a little bit more about LGI and also yourself.
Yeah, sure. So, as I already mentioned, I'm in here today to share with all of you how you and I can use ETFs as building blocks to optimize China exposure. And I also previously introduced LGI as being one of Southeast Asia's largest asset managers. And we manage up to 60 billion Sing dollars of assets. So we started our ETF journey back in 2017 when we listed our first ETF, which is our S-Suite ETF back then in October 2017. And between 2020 to 2022, we listed 3 ETFs within 18 months. And within 5 years, we built and grew our ETF business from 0 to 800 million. Today, with support investors like you and me, all of you here. And based on the latest SGX data as of the end of March, our ETFs are also within the top 10 ETFs held by Singapore retail investors like me here. And similarly, based on SGX data, we are also among the top 10 held by SRS and CFIS investors. So after sharing about our ETF journey, I also want to share about China. So after China's reopening back in December, it is a turnaround story that's being unfolded day by day. China is an extremely interesting market which holds immense potential, having both a strong foundation of industrial together with high-power companies that drive innovation. And today it is the world's second largest economy and the world's second largest stock market. So armed with foundation and innovation, it is on track to surpass the US and become the world's largest economy by 2028.
Thank you for that. Now, what are some characteristics of China? Because that's the topic of discussion. Maybe the characteristics within that space that has helped build a foundation for its current transformation.
Thank you, Olivia. It's an interesting question. So I think there are a few ways we can look at this. So perhaps let's talk about this on an economy level and also on the leadership level. So on the economy level in Q1 this year, China's GDP grew 4.5% year on year, based on data from China's National Bureau of Statistics that was released just yesterday. So this is faster than the 2.9% growth in the previous quarter. And this also outperformed analyst estimates of 4%. And this was in fact China's fastest growth since Q1 last year, when China's economy just grew by 4.8% during Q1 last year. And analysts poll this year have expected that China's growth in 2023 to accelerate to around 5.4% compared to 3% last year. And China itself has set a rather conservative growth target of around 5% this year. So basically, the PBOC, which is China's central bank this year, have also cut lenders' reserve requirements for the first time this year in March. And the government has since unveiled more and more fiscal stimulus. And unlike the two triple R cards previously back in 2022 that were announced during economic slowdowns, the latest triple R card that was announced by PBOC was effective on the 27th of March, was announced when the economy showed signs of recovery. And there were also various separate data that showed China's retail sales also accelerated to more than 10% and beating estimates and hitting also a two-year high when factory output also speeded up. So I've covered basically the economy level. And on leadership level, China also recently concluded its two sessions, which is called Liang Hui, earlier in March this year, officially electing President Xi Jinping for his third term and Premier Li Xiang as his new premier. So within President Xi Jinping's inner circle, Premier Li has been regarded as the most business politician. So perhaps some background about Premier Li himself. He was born in Rui'an, Wenzhou City, in Zhejiang province, and widely regarded as the birthplace of China's private economy. So in his long career, he has been known for two key economic achievements. First, he's been known very well for driving the financial reform pilot project to reform private lending within China. And second, he has also supported Tesla's Shanghai factory for extremely fast Shanghai speed, which he was then well known. And all these events during and after the Liang Hui, which is also called the two sessions, will shape China's broad direction for the next few years. And I basically summarize them into the three C's. The first C will be commitment, the second will be confidence, and the third will be continuity. So I'll touch about the first C first, which is about commitment. So commitment basically is the foundation where economic recovery is built upon. In the recent state-organized China Development Forum that happened earlier March, on around 28 March, Premier Li Xiang specifically assured Tim Cook and Ray Dalio that China will open up wider to the outside world. So other attendees during the forum included P&G CEO John Mueller and also HSBC CEO Noel Quinn. So this is a strong commitment from China's top leadership to the top foreign business CEOs in just his first month as premier. After talking about commitment, the next C would be about confidence, which is the fuel to keep China's engine running. So Premier Li and Jack Ma, as you see in the picture on the right, have had an extremely long relationship dating back even before 2014. So back in 2014, when Premier Li was governor of Zhejiang, he publicly said that there should be more Alibabas and more Jack Ma's. And when he was later party secretary of Jiangsu province back in 2016 to 2017, he also frequently met Jack Ma during this period to encourage investments. So given all these, Jack Ma's recent homecoming back to China after more than 1 year overseas is widely seen as a strong display of confidence in China's new government. And after talking about commitment and confidence, the third C will be about continuity, and particularly the continuity of policy to deliver economic growth. So to ensure continuity of especially monetary policy, China reappointed Gang as its PBOC central bank chief. So being US educated, Gang has been known as a pro-market figure capable of communicating on international stages, such as the G20. And he is also widely expected to deliver and continue policy stability, which is crucial to improve also business confidence, which is the other C we covered. And one recent example of its continuity is its reduction in the reserve requirement ratio in March this year. So with all these said, what we now see is China's regulatory risk receding and the new government's renewed focus on stability.
Thank you for that. Now you've covered the three C's, which I believe is foundational, right? That we need to know as just that core contextual basis before we proceed on to what is happening. So now that you've covered the three C's, Xiang, what about capturing opportunities within this space?
Yep. Thank you. Olivia, thank you so much. I've covered the three C's. The fourth C will be about capture, which is about capturing opportunities. So due to the global headwinds we all see outside China right now, I mean, there's expected to be great volatility. And in such volatile markets, it is crucial to stay diversified while also invested in resilient industry leaders. And this is what the China Leaders ETF is about, being a broad-based ETF made out of 80 China leaders that represent foundation and foster innovation. So let's now dive right deep into the China Leaders ETF. And as you see here, there are these key features about the ETF. Basically, I would summarize them into three key features. So the first one, by tracking the Hang Seng Stock Connect China 80 index, you gain access to the 80 largest Chinese companies listed in Hong Kong, Shanghai, and Shenzhen. And there's also an 8% weightage cap on individual stocks, together with a 40% sector weightage cap on sectors. So you enjoy diversification across stocks and sectors. And this is also the first China-focused ETF that will make a distribution in Singapore. So it previously made its first distribution back in July last year. So all these are three key features because large caps are usually mature companies that are less volatile during rough markets, especially like when investors become risk averse and also flight to more quality assets. And the regular distribution helps to uh, realize profits for investors periodically. And as you see here in terms of the index profile and characteristics, the portfolio includes constituents listed across Hong Kong, Shenzhen, and Shanghai. And as you see, 63% of these constituents are listed within China, while 37% are listed within Hong Kong. Having constituents are in fact listed across different jurisdictions will be important to ensure diversification. So in terms of Hong Kong, it's an international market, so it has higher and greater correlation with global markets like the US. And in contrast, markets like China are more domestic and self-sufficient, so it tends to have a lower correlation, and they are less affected with global markets and global events. In terms of these sectors, as you see here, ETF is also well diversified with high weightage in defensive sectors, such as consumer staples. This ETF, in fact, has exposure to the financial sector within China because Chinese banks deliver attractive and sustainable dividend yields of around 7 to 8%. And China's large and state-owned banks have been insulated largely from the external shocks we have seen faced by banks within the developed markets because their revenue and balance sheets are more domestic-centric and with the discipline to stay away from complex and risky products. And if we look further into the top 20 constituents of this ETF, we also see many household names that are consistently industry leaders that demonstrate resilience and also familiarity. So for example, Ping An Insurance, which is HSBC's largest shareholder, as you see here, ICBC, which is the world's largest bank, and also Guizhou Moutai, which is the world's largest liquor maker. And if you look at the next slide, in terms of the performance since its listing in August 2021, the ETF has closely tracked the benchmark, which is the Hang Seng Stock Connect China 80 index. And since its recent low in 31st October last year, it has grew 26% in terms of price as of the end of March. And if we compare it with the other China-focused ETFs listed within Singapore, since its listing, the ETF has also outperformed other China-focused ETFs, such as the Extractors MSCI China UCITS ETF, and also the Lixor China Enterprise UCITS ETF. So all these outperformance, in fact, can be attributed to the index exclusion of American Depository Receipts, also known as ADR, and it has helped reduce the index exposure to the foreign regulatory risks that have adversely affected US-listed Chinese companies, especially when the US SEC identified and wanted to potentially delist 174 companies that failed to comply with the Holding Foreign Companies Accountable Act. So by providing diversified exposure to 80 industry leaders listed in Hong Kong and China, the China Leaders ETF is less vulnerable to foreign regulatory risk and better positioned to provide you the broad-based exposure to China.
Thank you for that. Now, you mentioned the constituents. Now, what are some notable constituents of these ETF components that you mentioned?
Yeah, sure. Thank you, Olivia. So, I mean, there are many constituents, but let me share about the two key constituents among the top 10. So both are established industry leaders. So one is basically the world's largest bank, and another is the world's largest liquor maker. So for example, if we look at the world's largest bank, which is ICBC, it is the world's largest bank for the 10th consecutive year, with assets around 5.5 trillion US dollars, and it's also one of the ETF's top 10 constituents. So to set the context, right, for the recent banking failures we have seen, they have been mainly limited, I would say, to US and Europe, because China's banking sector is more domestic and insulated from the global financial markets. And compared to a lot of the Western international banks, which are more exposed to the troubled banks, Chinese banks, especially the big four, are state-owned and are required to have strong balance sheet and remaining well capitalized. And since their business activities are mainly within China, they are less known globally, although the big four Chinese banks are the world's biggest banks by assets. And despite a challenging economic environment, ICBC still managed to grow net profit to 360 billion renminbi in the whole of 2022, which is a 3.5% year-on-year growth. And as at December last year, it has remained well capitalized with our CET1 ratio and capital adequacy ratio above 14% and 19%. And in fact, when we compared with average target analyst prices, there have been more than 30% upside identified for ICBC so far. So the next constituent I want to talk about would be Guizhou Moutai, which is China's largest liquor maker. So in 1949, Guizhou Moutai was named and designated as the official drink for China's founding ceremony. And since then, it has been the brand of choice for elites and considered a status symbol for a lot of Chinese elites. So globally, it is also the world's largest liquor company by market cap. So it's larger than Diageo and Constellation brands. So fun fact, it is also larger than Coca-Cola and Pepsi, and being valued at around 2.15 trillion yuan. It is larger than Toyota, larger than Nike, and also larger than Disney. And it is also larger than ICBC, which is the world's largest bank, which we discussed earlier. So imagine the scale of a liquor company for it to be larger than the world's largest bank. So in Q4 last year also, Guizhou Moutai managed to grow revenue by 16% year-on-year to around 127 billion renminbi, despite all the ongoing COVID restrictions. And on the December of 2022 last year, it announced a 15.5 billion renminbi investment to implement the 14th five-year plans technological innovation project for multi-liquor. So all these are expected to increase production capacity after its completion. And in fact, all these also mean that multi-demand is expected to grow after the production capacity is increasing. So when comparing against average target prices, analysts have also identified more than 20% upside potential for Guizhou Moutai.
Thank you for highlighting that. Now, to summarize, what would you say are the key value propositions in investing in this ETF right now?
Oh, thank you, Olivia. So to summarize, the Lion OCBC Securities China Leaders ETF instantly offers investors like you and me diversified exposure to 80 China market giants, which include the industry leaders such as ICBC and Guizhou Moutai. And by excluding ADRs, the ETF is less vulnerable to foreign regulatory risk and provides you broad-based exposure to China's recovery. And with less than 2 Sing dollars right now, you will be able to participate in China's growth story. So please log on to the Moomoo app and ask everyone you know to search Y, which is YYY for the Sing dollar counter, and YYR for the renminbi counter to buy this ETF.
I love it. Thank you so much for highlighting that. And for the users that already typed in their questions for this, we will have a sharing session by Yong Shern later on how you can actually apply what Xiang actually shared in terms of where China is going and also how you can invest right now in this space. Now, Xiang, what are your insights on investing in other industries in China at the moment? Now, let's really zone it down to the tech sector, perhaps.
All right. So after understanding how the China Leaders ETF provides you the broad-based exposure to China, some of you here indeed might also prefer more concentrated sector exposure, together with also more volatility. So this would be where the Hang Seng Tech ETF comes in to provide you the specific exposure to Chinese tech giants. So now let me share about how the Hang Seng Tech ETF can be the efficient building block to help you gain this sector exposure. So basically, the ETF has three key features that helps you gain efficient exposure to the Chinese tech sector. First, by tracking the Hang Seng Tech Index, you gain access to the 30 largest Chinese tech giants that are listed on Hong Kong. There's also a 8% individual stock securities weightage cap applied on different stocks. So you avoid overexposure and build a diversified portfolio. And this index also has a unique IPO fast entry mechanism that enables newly listed tech companies to be included into the index without waiting for the next quarterly rebalance. And as you see here in terms of the portfolio characteristics, the ETF is rebalanced quarterly and heavily focused on technology. So with support from investors like yourself here, ETF's AUM has recently reached more than 340 million as of the end of March. And if we move on to the next slide in terms of portfolio constituents, there's 30 constituents, which many of them, as you see here, are well-known established tech market giants, capable of capturing the upcoming recovery in Chinese tech. And since its inception, if we look at the Hang Seng Tech ETF's performance, it's went through various ups and downs. And since its recent low on the 28th of October, the ETF has recovered more than 50% as of the 31st of March. So today, most of the factors behind the regulatory crackdown are receding, and we are seeing numerous bright sparks for the Chinese tech sector ahead.
Thank you so much for that. Okay, so it's the bright spots topic. Today we're talking about China's bright spots. Thank you still to the audience for your questions. I'm getting a lot of questions coming in. And for those of you who just joined us, today we're here with Lion Global Investors and Moomoo Singapore experts, and we're talking about China's bright spots. Okay, so thank you for joining us and keep those questions coming. Now, Xiang, what would you say are the particular bright spots then that you see for China's tech sector right now?
Yeah. So we are seeing a lot of bright sparks within the Chinese tech sector because of three key ingredients, which I can summarize them into ADD, which is also add. So the first bright spark would be approvals. So within China, video games require regulatory approval before they are published and monetized accordingly. So since November last year, China has been easing its regulatory crackdown on the tech sector. Specifically for its video gaming sector, China's two biggest online gaming company, which are Tencent and NetEase, started receiving their game license approvals in November last year. And notably, Tencent's game, which is called Metal Slug Awakening, was its first commercial game license that was received since April 2021. So imagine this was like an 18-month gap for not receiving license for Tencent game. And they, after that, managed to receive licenses. And on the 20th of March, China also further approved 27 more foreign games by Tencent, NetEase, and Bilibili. So all these three names I mentioned are all captured within the ETF in part of the 30 constituents. So the second element and ingredient I would say would be on development. And this is in terms of development is a very important development. So in this first press conference as Premier Li Xiang specifically highlighted the importance of technology and innovation in promoting and modern industrial system. Specifically, he also mentioned that government officials at all levels should sincerely care for and support development of private enterprises, build cordial relations with private entrepreneurs, and promote a culture of respect for entrepreneurs. And since all these have been said, Premier Li Xiang himself has led by example. In his first month as Premier, there have been numerous positive business-friendly developments. So the first would be after being abroad for more than 1 year, Jack Ma has returned. And one day after Jack Ma's return, Alibaba announced the biggest restructuring in its 24-year history, seeing it split into 6 business units, which are the different business units that are able and also to retain flexibility to conduct its IPO. And since then, in the state-organized China Development Forum on the 28th of March, Premier Li Qiang also specifically assured Apple CEO Tim Cook and Ray Dalio, which is the founder of Bridgewater Associates, that China will open up further to the outside world. So all these are strong commitments to the foreign business CEOs in just his first month as Premier. And if we talk about Premier Li Qiang even before he became Premier, one of his other notable achievements would be his oversight of the speedy construction and opening of Tesla's Shanghai factory when he was Shanghai's party secretary. So to Tesla, China is its second largest market after the US, accounting for more than 22% of its 2022 revenue. And its Shanghai's factory, in fact, is its largest production hub. So since the 2019 opening of Tesla's Shanghai factory, Elon Musk and Premier Li himself have also maintained active dialogue. So at the end of March, Elon Musk himself, in fact, announced plans to visit China as early as April, which is this month, to meet Premier Li. So all these suggest and signal that Premier Li executes his commitment about China opening up wider to the outside world, together with more market-friendly initiatives that are expected to be rolled out. And in terms of the final ingredient, that will be in terms of demand. So in terms of demand, Hong Kong is the most invested offshore market for mainland Chinese investors. And they have been enthusiastic to invest in the 2 Hong Kong-approved Hang Seng Tech ETFs via the Southbound ETF Connect scheme. So all these are expected to increase overall technical support for the Hang Seng Tech Index, thereby also increasing demand for ETF's constituents and also creating a virtuous cycle for better expected performance. So with all these seen, China's tech sector has also seen numerous interesting developments recently, especially about AI and video sharing. So I'll also share about 2 key constituents of the Hang Seng Tech ETF. So the first constituent I will talk about would be on Baidu, which is China's largest internet search engine. And basically it is China's Google and has more than 70% market share of its online search industry. It was founded back in 2000 and also recently completed its secondary Hong Kong listing around March 2021, where it raised around $3 billion US. So since its founding years, Baidu has been a forward-looking growth company, which started investing in AI and built ErnieBot, which is China's equivalent to ChatGPT, which is the craze right now. So some fun facts about Baidu. The bit is recent Q4 earnings and revenue estimates, announced a new share buyback program to repurchase up to $5 billion US of its shares until 2025. And in fact, on the 16th of March, when Baidu's founder, Robin Li, gave a demo of ErnieBot, more than 30,000 enterprises signed up to test its chatbot service within just 2 hours of its demo. And as a result, Baidu soared on 14% on the 17th of March, which is 1 day after its demo, making it the day's biggest winner in the Hang Seng Index. And by releasing ErnieBot on the 16th of March, this also gives Baidu a first mover advantage, especially in generative AI models. And after Baidu released ErnieBot, many other Chinese tech giants also started riding on this AI momentum. So for example, on the 10th of April, Chinese AI firm, which is also backed by Alibaba, SenseTime, unveiled its AI-powered products, which included a chatbot, together with image generators using its AI model called SenseNova. And on Alibaba itself, it's also released its chatbot, AI chatbot, which is called Tong Yi Qianwen, on an Alibaba Cloud event on 11th of April. And in fact, there were also plans by Alibaba announced to integrate Tong Yi Qianwen into Alibaba Cloud and all its company's business applications. In fact, Chinese tech giants that announced their work on ChatGPT equivalents included Tencent, which has a chatbot called Hunyuan AD, JD.com, which has an AI model called ChatJD, and also NetEase, which have announced large language models to serve its education business. But rest assured, in fact, all these are constituents of the Hang Seng Tech ETF. So instead of searching and researching about reading through all the news to pick the exact and specific stock that will win this Chinese AI space, the Hang Seng Tech ETF already includes all the participants in this AI race. And so the next constituent after talking about Baidu and also talking about AI will be another trend, which is about video sharing. And this constituent will be Kuaishou, which is directly translated into fast hand for those who know Chinese. So it is a very popular video sharing app, similar to TikTok, with more than 640 million active monthly users as of the end of 2022, which is around 46% of China's entire population. So live streaming and video sharing are the hot craze within China right now. And compared to TikTok or Douyin, Kuaishou is more popular with the older users that live outside China's tier 1 cities. So its initial popularity, in fact, came about when from these videos about Chinese rural life, and it relies more on e-commerce revenue compared to advertising revenue, which Douyin relies more on, and also rewards content creators to build a highly engaged user base. So in Q4 last year, Kuaishou also facilitated more than 312 billion of e-commerce transactions, which is 30% higher compared to Q4 in 2021. Within the same quarter of Q4 2022, it grew its net profit by around 27% to 13 billion renminbi, compared to 10 billion renminbi just in Q4 2021. So in fact, when comparing against all the average target prices set by analysts, there's more than 50% upside potential identified. So basically, I've covered a lot, but to summarize, the Hang Seng Tech ETF instantly offers you exposure to the 30 largest Chinese tech market giants. And with less than $1, you will be able to participate in the Chinese tech growth story. So similarly, please log on to your Moomoo app and ask everyone you know. So search HST for the Sing dollar counter and HSS for the US dollar counter to buy this ETF.
Thank you so much for covering the bright sparks, especially the insights that you shared regarding each profile within China's tech sector right now. So overall, Xiang, let's summarize it. How can we best take action then going forward and to continue building our China portfolio right now?
So thank you, Olivia, for this great question. We have really covered a lot today. So it's important to summarize and then take action. So in terms of why, we spoke about the 3 C's of China: commitment, confidence, and continuity. And his first month as Premier Li Qiang committed to top foreign business CEOs like Tim Cook that China will open up further and wider to the outside world. After more than 1 year overseas, Jack Ma's return to China has also lent credibility to Premier Li's reassurance. Growth-focused policies are also expected to maintain continuity with the reappointment of Yi Gang as PBOC chief. So we covered why here. So in terms of how to build a diversified Chinese portfolio, it's important to adopt a core satellite approach. So the core would be the foundation where you build your portfolio with established industry leaders with lower volatility. So this would be where the China Leaders ETF comes in, by giving you broad-based exposure to 80 China market giants. and to provide you with the additional returns through concentrated exposure and greater volatility, the Hang Seng Tech ETFs then comes in as a satellite allocation to generate the extra kicker and also the alpha. So with all these said, there will be short-term volatility that are happening as we see the recent banking crises and rate hikes further exhibit its effects on the West. But if we look long-term and think longer term, China is the world's second largest economy and is expected to overtake the US as the world's largest economy by 2028. All the recent crises that have happened in the West are expected to, in fact, better position China, especially when China still managed to grow its GDP by 4.5% in Q1 this year and beat and outperform analyst estimates. And in fact, with all the volatility that's happening right now, it might be a good entry point for you to accumulate Chinese ETFs right now using the Moomoo app and dollar cost average. So I hope today's session has been useful to help you capture China's bright sparks. Thank you for being a great audience, and I'll pass time back to Olivia.
Thank you so much, Xiang from LGI, for that. We'll answer some questions from the audience later on in the show. So keep those questions coming. I know you guys are excited to ask more questions related to the ETF or even this potential opportunity space, even for Yong, Shern later. So keep them coming. I really love the discussions going on right now in the chat. So we'll pick out the best questions at the end, okay? So Xiang will be back with you for the live Q&A later on. So you've heard the analysis, you've heard the sharing session on today's topic of China's bright spots, but how exactly can you apply what you learned into the app? So it's time to take out your phones, your desktop app, open your Moomoo app, and follow Yong Shern's guidance as we do a live demonstration for you. Let's invite Yong Shern back into the room.
Hi, Olivia.
Welcome back.
Yeah, yes, I'm back.
Okay, so Yong, Shern, tell us and the audience that just joined us as well, how can they benefit from your sharing today?
Okay, so my sharing today will be telling you on how to subscribe the funds or even buying the ETF through us at a very affordable commission rate on the platform fee. And what's even better is we also do provide a lot of courses on the Moomoo platform or Moomoo app itself for you to learn what is ETF or learn what is the benefits of investing in ETF, or say if you want to buy more diversified or other ETF on the platform. I'll also be showing you on where to find and to search for an ETF. So yep, so later I'll share my screen. Feel free if you're ready, if you're holding your phone right now or you're in front of your tablet, please feel free to follow us.
Perfect. Take it away, Yong Shern.
Sure. Please allow me to share my screen. Okay. All right. So while we are waiting for everyone to log into your Moomoo app, or I've just briefly introduced the platform, briefly introduced about this watch list. So by default, when you sign into your Moomoo app, be it the Android device or your iOS device, you'll be seeing this watch list page. So the version that I'm using is Android tablet version. So for those who are using mobile device, the layout will be more or less the same, the UI in terms of the user interface. So okay, so from this watch list, you can create multiple watch lists. Like you can have your positions, you can have your index, portfolio, and everything. So with this, I can show you that how you can add your stocks into this watch list. You can first of all, you can go to markets. To find LGI ETF, you can go to markets and you can go to Singapore Market SG and click on ETF. So with all this ETF, you'll be able to see all the ETF listed on Singapore Exchange. So to find LGI, of course, LGI starts with L, so you can sort the symbol by alphabetical order. So let's say these are the LGI ETF. They have SLC, low carbon ETF. They have Lion Philip S REITs. They have OCBC, Hang Seng Tech, and also China leaders, which I think Xiang have mentioned China leader as well as the Hang Seng Tech ETF earlier during his presentation. So maybe just to we go for the triple Y, which is this is the China leader. So how to add them into watches? On the top right, there's a heart shape. You just click on it. When it turns red, then it has been added to your watches. But let's say you just want to create a specific group, you can click edit group. So you can have add it to the respective group, respective watch list group. So this is for the ETF page for on Moomoo platform. Of course, this is the HSS. This is denominated in US dollar, and HST. This is the Sing dollar denominated. Again, if you want to watch the breakdown of this ETF, you can always go to the breakdown, look at the component index, look at the composition of the sectors or even the regions and the holding as well as the total AUM. And also the summary, the fund objective, or any information available. Of course, you want to look at the news of its components as well as the comments. We can look at what are the users thinking about this ETF. Of course, if you are not looking at ETF, but you want to buy funds, let's say you want to buy from the LGI, so you can always go to this portfolio under the funds tab. Fund houses, and you can go to Lion Global Investors. This is LGI. So there are a couple of funds listed here, which allow you to buy at a zero subscription fee. But of course, just like I have mentioned earlier, so if you want to buy funds or you want to understand what is ETF, you can always go to Discover and go to Learn to find out more about stocks, funds. Of course, the funds also includes ETF basics, why you should invest in ETF. For now, maybe just like to add on what Xiang has shared. In Singapore Exchange, if you are buying any stocks, I think usually the minimum quantity is 100 shares. But for ETFs, this you can buy as low as 1 share, which Xiang have already mentioned that this is 1 share only. So this makes the dollar cost averaging strategy more flexible. By buying 1 share, let's say this month you are thinking to allocate $300, but $300 when the ETF price is priced at 90 cents or even 70 cents. So you don't need to buy a specific quantity. You can just max out based on the available dollar that you put in to customize the quantity. And of course, like what Xiang said, buying through Moomoo is very easy, very convenient, and this also with our powerful platform, you can always search price alert, set price alert, or even you can do a stop loss strategy if you have any to do a risk management for a portfolio. But that's not really usual for ETF investing, or especially you are investing it for the long term. As always, if you have any inquiries, feel free to contact us through our customer service. We have a 24 hours customer service through live chat or even phone call services. All right, I think that's about my sharing. Back to you, Olivia. Thank you, everyone.
Thank you so much, Yong, Shern, for that. Now, you've shared the basics that they need to know, the pathway as well. I think that's very important because, it's not enough for us to just consume it. In terms of knowledge, right? We're just listening to the insights. But at the end of the day, part of the learning process is to apply what you learn and see if that suits your own personal investment journey. So really today, once again, to remind everyone, I see a lot of questions coming in, so I'm very happy about about that. And I've already started picking out the top ones. We're going to ask our guests when they return back to the room. But really today is about education. So, it's educating yourself. Where is that next potential opportunity that you can spot within Chinese reopening states? And because there's so much talk about this in the communities, it's even more important that we keep learning and we keep growing the community within this space. And also, I think in general, with these learning experiences, like what Yong shared and also what Xiang shared, you can always watch the replays. Okay, so it's important after this. I'll share more details later because some of you have already asked, how can I watch the replay of this? No worries. You can always watch it in-app if you're tuning in-app on the Moomoo app, or you can tune in on our YouTube, Facebook, and also other channels that you can have the QR code for later on at the end. Okay? Thank you so much, everyone. Now for the most exciting part of the live webinar, I'd like to invite everyone back into the room so that we can ask the key questions. Okay, looks like everyone's back in the room. Welcome back, everyone. I've got some questions for you. Let's go into the first question. So the first question is about the ETF. Now, Xiang, can you recap again? Which stock exchanges does the China Leaders ETF have constituents in?
All right. There's constituents within 3 stock exchanges, which is the Hong Kong Stock Exchange, Shanghai Stock Exchange, and Shenzhen Stock Exchange. So 63% of the constituents by market cap are within China and 37% within Hong Kong.
Thank you for that. Okay, next question. So I'm looking at the news, the government to increase infrastructure spending. Now, what would you say the effects will be on this ETF in terms of the sectors of infrastructure?
So in terms of the increase in infrastructure spending by China, I mean, it's an expansionary fiscal policy. So it's in fact expected to boost the economy. And so in overall, it will trickle down and in fact benefit a lot of the broad-based industrial. So with all these actually within the China Leaders ETF, it is a balance of industrial companies which represent foundation, together with also the more forward-looking growth companies that represent innovation. So all these are in fact expected to benefit the industrial company side, which is for the ETF's foundational element, and expected to overall help benefit the ETF for investors.
Thank you for that. Okay, next question is about the OCBC Lion Hang Seng Tech ETF. Okay, so currently, could you just summarize for us the current holdings for it?
Current holdings as in the 30 constituents?
I believe so. So maybe we could just quickly recap on what you shared regarding this.
All right. So in terms of the 30 constituents, I mean, if we go to slide 5 of the Hang Seng Tech ETF deck, I mean, there are 30 constituents there. I mean, the top few include Alibaba, Tencent, Meituan, Kuaishou, and Xiaomi. So all these are big brand names within China. And we also covered about Baidu and Kuaishou earlier. Baidu is a strong player within the AI space after unveiling its chatbot, which is Ernie Bot, and having a first mover advantage. And since then, we have seen other companies like Alibaba, SenseTime, which are also all part of these 30 constituents, unveiling their relevant chatbots and also AI models to capture the AI trends. And another element and also another hot craze and trend that the Hang Seng Tech ETF is also capturing would be also on video sharing, which is also seen in Kuaishou, which is one of the top 5 constituents of this ETF. So in overall, this ETF captures the 30 tech market giants, which are comprehensive in terms of its coverage of various forward-looking trends. And all these are growth trends. which allow you and helps you invest within and into the Chinese tech growth story.
Mm-hmm. Got it. Okay. So back to the China Leaders ETF. What is the China Leaders ETF's distribution policy?
So in terms of its distribution policy, it is the first China-focused ETF within Singapore that will make a distribution. So its distribution policy is annual. So the policy in terms of the dividend rate, it will be announced by end June, with the record date also around end June, and payment by end of July. So basically, it means you are just like around 2 or 3 months away to receive your first dividend if you are not yet the unit holder for the China Leaders ETF.
Thank you for that. Next question is about the index distribution. So what is the index's distribution yield for the China Leaders ETF?
All right. So in terms of the index distribution yield, right now it's above 3% at this stage, as based on what we have seen based on Bloomberg so far. Yeah.
Okay, thank you. So this question is for Yong Shern. So other than what you just shared in the demo, if I'm a new investor in this space, do you have any advice for me if I want to start subscribing to this ETF?
Oh, well, I would say subscribing to this ETF, my personal advice is always go in several tranches because you never know the peak or even the bottom of the market. So my personal strategy is always don't put everything in one egg. I think ETF is a good product, it's a good investment vehicle to diversify your holdings, but it's just a matter of the cost price that you enter. Because when you enter at the very high price, you will feel very uncomfortable, even though you're not going to liquidate it anytime. Best is you could have don't chase too high. Yeah.
Okay, thank you for that. So, Xiang, you mentioned the ChatGPT revelations as well, especially for this week, and of course the Chinese rendition of it. So, someone would like to know for AI, right? So, artificial intelligence ETFs in the US are gaining traction amongst investors, and I've seen it as well on the community forums. Now, do you think in some way that could also translate to maybe a AI ETF within the Chinese space? Because we covered tech. So is there any way that is also a part of the current tech ETF, or what do you have to share regarding this?
So in terms of the China, in terms of AI ETF, within China, if you buy in terms of A shares, there should be this kind of AI ETFs, but because it's A shares for foreign investors like us based in Singapore, you and I, we cannot buy this kind of A share ETFs, which are based in China. So the other few ways which you can gain exposure would be, for example, buying tech-focused ETFs like the Hang Seng Tech ETF, as you see here, to be able to gain this kind of exposure. And as mentioned earlier, in terms of the capturing of the AI space and also AI trends, the Hang Seng Tech ETF has almost all the participants of the Chinese AI race captured within the constituents, the top 30 constituents. And all these are well-capitalized constituents, well-capitalized companies that are invested heavily in terms of the chatbots. For example, like we have heard about Baidu, which is the first mover, Alibaba, SenseTime, and even in fact Kuaishou is also has also invested in AI to be able to better facilitate and also its video sharing platform. So all these are good trends and also good growth trends for investors to capture. AI will be the important trend of the upcoming decade, and it's important to be able to capture them and capture the Chinese version through ETFs. And one way would be through the Hang Seng Tech ETF.
Absolutely. Thank you for highlighting that. Okay, next question is on the rising rates environment of the world. and how perhaps this ETF can be a part of that strategy to hedge towards the uncertainty that we're facing at the moment. So, someone would like to know, there are so many different policies within US, Europe, but then for China, we're talking about the China Central Bank. There is also that stimulus package, right? So would you say with the inflation issues around the world, how does that then affect China? But at the same time, I think more importantly, how does this ETF help within the investment re-strategizing?
All right. So in terms of the Fed interest rate hikes we have seen since last year, I think in terms of most of the analysts forecasts are forecasting at most 1 or 2 rate hikes. So interest rates, US interest rates are likely to peak around 5% or maybe 5.25%. So beyond that, there's unlikely more rate cuts that will be coming. Because if they hike interest rates too much, there could be more bad effects that happen. So because of that, China in fact is on the flip side, because just reopened and also scrapped its zero COVID policies. It is in fact on the flip side, on I would say a contrarian side, where it's more on an expansionary side, where the other countries in the developed markets are on the contractionary side. So by betting or even investing within China, you will be able to in fact ride on the growth trend that is happening after the China reopening that has been happening. And also in terms of through the China Leaders ETF, we have seen a lot of volatility that's been happening, in the West and also within US due to all the banking failures. There were a lot of it triggered by the rate hikes. So in fact, by investing through a broad-based ETF, you gain that proper diversification, while at the same time also enjoy lower volatility, which will be crucial. And like what Yong also previously mentioned, dollar cost average will be an important strategy to so you avoid entering at the peak, and also at the same time be able to smooth out the price movements and also enjoy diversification within your portfolio while investing within China.
Thank you for that. The next question, I do want to ask you something more specific to ETF, and before I could even ask it, someone already asked. So, can you use SRS CPF to purchase these ETF units?
For the Hang Seng Tech ETF and China Leaders ETF, you can use SRS to purchase. For CPF, because they are not yet 3 years old, so you cannot use CPF yet. But once it's around 3 years old, we will submit for CPF board application for approval.
Got it. And what currencies can we trade for both ETFs?
So for the Hang Seng Tech ETF, you can trade them in Sing dollar under the HST, or you can trade USD under HSS. And for the China Leaders ETF, you can trade Sing dollar under triple Y, which is YYY, and also YYR for the renminbi counter.
Thank you for that. Next question is about the index. Okay, so why is Alibaba not in the Hang Seng Stock Connect China 80 index?
Okay, it's simple. Alibaba indeed is within the Hang Seng Tech ETF, but it's not within the China Leaders ETF because it is not eligible for Stock Connect. And it is not eligible for Stock Connect because it is an ADR listed in the US.
Thank you for that. Yeah, we had some questions on this, but I think going back to the actual app and how they can subscribe, this is for both Yong, Shern, and Xiang. How can I access the tickers, and what are the stock tickers for the Hang Seng Tech and China Leaders ETF? Xiang?
All right. So for the Hang Seng Tech ETF, the Sing dollar counter is HST. And for the US dollar counter for the Hang Seng Tech ETF is HSS. So HST and HSS. For the China Leaders ETF, the Sing dollar counter is YYY.
Thank you.
And for the renminbi counter is YYR. Yep. So to Yongchen.
Thank you for that.
Yep.
Now, yeah, Yong Shern. So, what is the fastest way? Because I know there were also some updates. As always, the app always gets better. So, is there anything in particular you want to highlight for this particular pathway?
Yep, I think just now I've shown that you can pre-segmentize your watches not only solely for just for your Singapore holdings, but you can set up one specifically for your ETF holdings. So with this, by having all these triple Y or even HST on one single portfolio, one single watch list, it helps you to track the news because with this watch list, you'll be able to leverage on our news platform that allows you to customize based on your watch list group. So from there, you'll be able to see the news specifically for the Hang Seng Tech or even China leaders, especially the component index. I mean the component stocks.
Mm-hmm. Thank you so much. Next question. What are the overlap stocks between the Hang Seng Stock Connect China 80 Index and the Hang Seng Tech Index? Because there were some overlaps, such as Tencent. Shenxiang?
So thank you, Olivia. So basically there are around 6 overlap stocks between the China Leaders ETF and the Hang Seng Tech ETF. So for example, Tencent, like you rightly pointed out, Meituan is also another one, Xiaomi, Haier Smart Home, Kuaishou Technology, and JD Health. And in terms of the aggregate weights, they are roughly 16% or 39% between the China Leaders ETF and the Hang Seng Tech ETF respectively.
Mm-hmm. Okay, thank you for highlighting that difference. But another difference I would like to also clarify, and someone has also asked on one of our broadcast forums, what are the differences between the Line OCBC Securities China Leaders ETF and the Hang Seng Tech ETF?
So thank you, Olivia. There are a few differences. So the first difference would be in terms of the number of constituents. The Hang Seng Tech ETF has 30 constituents, while the China Leaders ETF has 80 constituents. And in terms of trading currencies, both has Sing dollar trading currency. But for the Hang Seng Tech ETF, there's a US dollar trading currency, while the China Leaders ETF has a renminbi trading currency. And in terms of sector exposure, there are certain sectors, for example, like telco, financials, consumer staples, energy, utilities, and materials that are within the China Leaders ETF, but they are not within the Hang Seng Tech ETF. In terms of I would say constituent coverage, the Hang Seng Tech ETF mainly covers the 30 China tech market giants, which is those listed in within Hong Kong. But for the China Leaders ETF, it covers companies listed in Hong Kong, Shenzhen, and Shanghai. And in terms of the constituents, because of all these differences in the stock exchanges covered, for China Leaders ETF, it covers A shares, while the Hang Seng Tech ETF just covers Hong Kong listed shares. So these are the differences. And the final difference I would say would be on the distribution policy. China Leaders ETF gives annual distribution, while the Hang Seng Tech ETF doesn't give distribution. Yeah.
Thank you for that. Okay, so I'm going to pick out two more questions because I do believe it's important. One is really about the management fee. So perhaps Yongchen, you can also highlight where they can find this and if they can go into the details of this. But could you give me more details on the total expense ratio and the management fee with this ETF?
In terms of for the Hang Seng Tech ETF, the total expense ratio is 0.6% and 0.45% in terms of management fee. So the management fee is already included as part of the total expense ratio. For China Leaders ETF, the management fee is 0.45%, and also the total expense ratio is capped at 0.62% until August this year.
Mm-hmm. And Yong Shern, they can find more details, right? Based on what you shared just now.
Yes, thank you, Olivia, and also so yes, basically you can find the management fee through the main quote page. So let's say you are visiting this counter through the watch list, then just click on the ETF ticker and go to the summary page. Then you'll be able to see a column of the management fee for HST, I just check, it's 0.545% based on data that we have. But of course, let's say you do not have this HST on your existing watch list or even other LGI ETF, you can go to search and type in tickers, triple Y or HST, click on it, and you'll be able to see the summary information of the counter, the chart, and then you go to the summary panel, and you'll be able to see the management fee. Every single ETF would have a different management fee, so please take note of it.
Very important. Thank you for also highlighting that small detail that we have to know. For those of you who want to know more about this, you can always watch the replay of this and based on what Yong, Shern, and Xiang shared earlier. Okay, I've got another question that just came in, and I do think it's important. I'll open it to the floor. Like all investments, we're looking at risk and opportunity within every ETF. So, of course, this will also carry its own set of opportunities, but also risks. So, what horizon are investors looking at before they make that decision? And let's answer this from perhaps a seasoned investor perspective. Yong, Shern?
Sorry, Olivia, I didn't really catch it. So would you mind repeating it?
No problem. So the question was about investments, right? So like all investments, we're also talking about how the ETF, in general, it also carries its own set of opportunities, but also risks, right? So what horizon are investors looking at before they make that decision that it's profitable for them? And let's answer this from a seasoned investor's perspective.
Okay, all right. Thank you for repeating it. So for in terms of horizon wise, I would say, when you should take profit, depending on your investing goal. Let's say you are buying this for because when you begin investing in something, you must know what is your end goal. So if your end goal is you want to profit from, let's say you bought this, I mean, talking about some hindsight thing. Let's say if you're buying this for China reopening play back in 2022, so now China has reopened. The economic data, I mean, it's, like Xinjiang said earlier, 4.5% of GDP data actually outperformed the analyst estimates. So if you think that this story has played out and you think the market upside is very limited, I think now is the time for you to take profit. I mean, if your play is that, if your objective is that, but let's say if you bought this Hang Seng Tech Index, also same last year, maybe mid of last year, or even October last year, so your cost price should be relatively low. So if your objective is to benefit, if you want to invest in China long term and you look at the valuation was very attractive, then I would say perhaps you may continue to hold it because your objective is to buy at a low valuation. So perhaps in the future, when there's a lot of news saying that a lot of these Hang Seng Index indices, the stocks are highly overvalued, then I think that's the time for you to rebalance your own portfolio. That's my personal thoughts. And also, when you're buying ETF, do take note of the quality of I mean, in terms of the asset manager and also the custodian, because I would say if you're buying long term, I believe buying the names that that you can see locally, yeah, that will really give you more peace of mind.
Yep. Thank
and
you.
For me, in terms of investments, okay, the thing is there will always be short-term volatility and price movements that happen every time. I mean, recently, especially this year, we have seen the banking crisis unfold itself and also exhibit its effect on the West. So in terms of investing, we shouldn't approach it just within the short term, which is like just a few months thing. In fact, we should try to think of it more like a longer term kind of perspective. And if we think longer term, China is the world's second largest economy, and it's expected to overtake the US as the world's largest economy by 2028. So all these crises that have been happening within the Western world are in fact expected to better position China, especially when China still managed to grow GDP by 4.5% in Q1 this year. So in fact, given all these volatility that's happening, it might be a good entry point for you to accumulate and gain China exposure through ETFs to capture China's bright sparks using the Moomoo app and dollar cost average.
Right. Thank you so much for highlighting that. I think it's very important because we got a lot of seasoned investors as well that are looking at rebalancing and re-strategizing, as Yong, Shern, and Xiang mentioned. Now, I really love all the questions, everyone, but that is all the time we have today. I think we covered pretty much all grounds that you need to know, both for China's bright spots, industries, and the indexes, and also the ETF product. So if you have any more questions, you can always, I will leave an email later on, and you can still ask your questions for both our experts today. Now, just to round up our discussion, gentlemen, what is that final takeaway you would like to leave our audience with today? Xiang?
So my final takeaway is there'll always be volatility happening. So in fact, it's not important to think about all the volatility or the short-term price movements. Think of it longer term. And if we think of it longer term, China is already the world's second largest economy, expected to overtake US by 2028 to be the world's largest economy. All the recent crises we have seen will be benefiting China and better position it. So it might be a good entry point to gain China exposure and optimize China exposure through ETFs using the Moomoo app and dollar cost average to smooth out all the price volatility.
Thank you so much for that. Yong, Shern?
Yep. Today maybe I'll end with the word saying that if you could spend 10 to 15 hours to plan your trip to Europe, or even plan your trip to China or even Japan, why not just why not you also spend about 10 to 15 hours to do research on what you're going to invest? This will really helps you a lot to know what you're investing in. From there, if there's any volatility, like quoted by Xiang earlier, you'll be able to ride through it comfortably. So my advice is know what you're investing in.
Always know what you're investing in and plan ahead and think long term, like what Xiang and Yong Shern mentioned. Now, that was Xiang from Lion Global Investors and Yong Shern from Moomoo Singapore. Thank you so much, gentlemen, for being on the show. I look forward to our next show together.
Thank you, Olivia, and thank you, everyone.
Thank you, Olivia, and thank you, everyone, for your support.
Now, to the audience, thank you for being with us. I love the questions. It's really great to be a part of the discussion with you. So remember, here's the email as promised. You can drop in your questions if you have anything related to the product, the themes we mentioned today, or anything specifically for our experts today. Just drop us an email and our team will get back to you. Now, we're heading into mid-year soon, so it's always important that you keep up to date and be in the know of the current trends, but also the different ways you can strategize and listen, learn together, and guide each other in the communities so that we can make better investment decisions as a whole. So do check out all the other content that we have for you, and also the main shows that are upcoming as well, created and crafted just for you. So you can scan the QR code if you want to follow and also be in the know of upcoming shows and webinars like these, because really it's about creating shows that connect you with the experts that we have so that we can learn together. So follow our socials for upcoming content, and you can watch the replay of today if you scan the QR code right here. As usual, it was a pleasure having you with us. See you for the next show. Once again, you're with me, Olivia Higgins. Have a profitable day.